Good Monday afternoon to you. Welcome to the Jon Sanchez Show on News Talk 780 KOH. Pleasure to be with you. Pleasure to be with my brother, Dr. Dennis Sanchez, the AI doctor. What a perfect day for you to join us, my friend. What a perfect day to join us.
As if AI wasn't here yesterday.
Yeah, as if it wasn't here yesterday, but at least Friday, our yesterday, didn't have much impact on the market. And I'll tell you, Dennis and I were chatting this morning, coming up with today's topic, and this was long before the stock market started selling off today. And all you hear as far as there's two reasons for today's stock market decline. And one of them ties right perfectly into the topic that we made up early this morning, again, before the market started selling off. And that is, there was a research report written by a firm today that came out. I think it was maybe written yesterday, but everybody got their hands on it today, talking about how AI is actually damaging the economy, not helping the economy, but damaging the economy. Wall Street, like I said, got their hands on that and went, so there is some risk to this. So this rotation we keep seeing on again, off again out of software. Oh, that is a problem. Oh, these companies are stretched and, going into massive debts. Oh, that all of a sudden, Dennis, everything became reality today. And then you take that on top of course, what you and I touched on throughout the weekend, and I went into great depth on the show on Friday, and that is, of course, the Supreme Court ruling down President Trump's tariffs. No one's going to high five me, so I'm going to high five myself. So there it is right there. I told all of you on Friday, did I not, that when Trump made the announcement Friday morning of a 10% global tariff, I said, looking into the rule, that can go as high as 15%. And I said, right here behind this microphone, I said, I bet my bottom dollar he increases it to 15%. He's that upset. And sure enough, what did he do Saturday morning? Bumped it up to 15%. And now it's a major, major mess. It's a major mess. Now you're getting Republicans coming back, Dennis, and saying, whoa, wait a minute here. You can't do this. You're actually getting some Republicans now saying, look, after this 15 days, which is what this new 15% global tariff is allowed. That's all it can do, 115 days. After that, it has to go to Congress, and Congress has to approve this new 15% global tariff. Congress is saying, we're not going to be doing that. So you have that mess on top of it. Now there's, again, Section 122 global tariff is what this is called. There's two other sections that he's looking to do, but you had scholar after scholar, meaning in the legal world, come out over the weekend today saying he can't do it. I mean, I'm talking on both sides of the aisle. He can't do it. It's not going to work. So lo and behold, now we fast forward to events of today, which again, we'll get into the market sell-off, and then we'll tell you about this topic. Sorry to jump ahead so much here, bro, but man, oh man, what a mess.
Yeah, no, I'm just trying to keep up.
Yeah. And so then you had today, European Union came out and said, that meeting we're supposed to have tomorrow, meaning Tuesday, where we're going to ratify the trade agreements that I'm talking as if I'm the EU, that the EU ratified and agreed to with the US, after Liberation Day back on April the 4th. Guess what? We're not going to ratify it tomorrow. We're not signing anything. But now those deals, those deals are gone by the wayside. You had China come out and say the same thing. We're not signing anything. We're not moving forward on anything. They're calling it tariff chaos right now. Then, literally, as the show music, and I'm going to bring up the story real quick here because I have not even had a chance to read it yet. Then as the show intro music was beginning, we had coming across the news wires that FedEx is suing the U.S. government to get their tariff money back. And so this was something else that went through on Friday saying, folks, there were about 250, 300 companies on Friday that had already previously filed lawsuits against the U.S. government to get their tariff money back. Now they're saying there are multiple thousands of companies that have filed lawsuits against the U.S. government to get this money back. So you have you have corporate America trying to get their money back from the government. You now have many small businesses trying to get their money back. And then, as I said, Dennis, on Friday, I said, I never say it's a good time to be an attorney, but I tell you what, if I was doing a career change, I'd become an attorney right now, because I think there's going to be a lot of attorneys that are going to become very, very filthy rich, because they're going to be representing all of the consumers out there. Imagine the massive amounts of class action lawsuits against the government saying, hey, guess what? I paid an extra $10 for my product that I bought. I want that back. And you multiply that times hundreds of millions of people, and there's a whole nother mess. Folks, I don't mean to be a Debbie Downer here with you to start the show off, but that's what we dealt with today, and it all culminated together to produce a day that was just one sell after the other. This market tried a couple times to find its way back, and it just couldn't do it. Every time it did, I mean, there were big institutional sell orders came through. They were moving money over to the safe haven of the bond market, which I'll express through the decline in the bond yields. Remember, they move in opposite directions. I mean, the list just goes on and on. Then, so the end result was we closed very near. Let me look at my list here. Our low of the day on the Dow was 48,731. We closed at 48,804. So, it tells you how bad it really, really was. But it was a very tough day, and we are now, folks, in a mess. I told you about this on Friday. I told you I don't understand why the market rallied on Friday on the news. It had to have been some short cover rally or something. Today's reaction is what I would expect, and this is what I warned everybody about on Friday. This is not a good thing, Dennis, for the economy, for the markets, and then you add in the concern about AI, and it was a perfect storm today.
It almost seems like some people are using AI as an excuse for human-made problems.
So. That is a great point. Expand on that, because that's an excellent point, and you're absolutely right.
Well, it's just an easy target, especially coming out with a report like that. You would think that I kept thinking, well, where's the report on the impact the negative impact the tariffs have had on our economy? At least, it'd be interesting to understand that. But it's, I just question every kind of opinion like that comes out, and also really question the people that are interpreting it and saying, this is the truth. It's very, very interesting.
Right.
Have you ever seen anything like this combination of things?
Yeah, I have. I mean, I've said this for years, since AI really has become prevalent in a daily discussion that we have on this program, and again, why we're so blessed to have you on Mondays. I have, in that you go back to the .com era, and there's a lot of similarities of what we're going through in this AI boom that we went through in the .com boom, right? You have this irrational exuberance, as former Chair Greenspan said. You got this irrational exuberance, meaning all you had to do is have AI in your name, or say, we're involved in AI in some form or fashion, and your stock went up. That seemed to be the trend. That was the same thing, as you remember, you and I both lived through that time period, where if you had .com in your name, your stock went up back in the .com era. This one feels a little bit different. And unfortunately, when I say it feels different in a negative sense. And here's why. We had valuations, right? That's when the comment that I just said, rational exuberance, that's when Fed Chair Alan Greenspan came out. You always give the analogy. He kind of took a needle and kind of poked it into the balloon a little bit and started letting air out. And then all of a sudden that balloon was gone, and meaning the .com bubble burst. We didn't have crazy valuations. What we had during the .com era, we had companies that their stock was going through the stratosphere, and they had no earnings, or worse yet, either they were a pimple-faced kid that just launched some company, and Wall Street was stupid enough to give them hundreds of millions of dollars that they never saw again, or their investors never saw. But you also had companies that were losing money hand over fist, but it didn't matter because they had .com in their name. This time, what's different, to answer your question, is you've got major players investing in the AI space, hundreds and hundreds of billions. We've had a number of shows with you where we've talked about the market cap, right? The market capitalization, the amount of money that the Amazons and the Metas and the Microsofts of the world are putting into AI, which I will never sit here and doubt their mental capacity and their business acumen, because they've proven people wrong more times than not. You get in situations like this where one report comes out that is really bashing the economy, and then all of a sudden people go, and you start putting 1 + 1 = 2, 2 + 2 = 4, and all of a sudden now you have that quote irrational exuberance. It hasn't lasted. We've had these little, as you know, these little intermittent periods of this software rotation and AI rotation. And then we rotate out of it. And the next thing you know, we come back after the stocks get cheap enough. And, people like, I can't bypass this. My favorite technology or AI company, I can't bypass that. I gotta jump in there. But this report, I'll cover it just briefly. I don't have access to the full report. It was written by a company called Citrini Research, and they call it the 2028 Global Intelligence Crisis. And I'll just read you the first paragraph because it's mind-boggling.
Mm-hmm.
They said the unemployment rate printed at 10.2% this morning, a 0.3% upside surprise. The market sold off 2% on the number, bringing the cumulative drawdown in the S&P to 38% from its October 2026 highs, to down 38%. 10.2% unemployment. Now, again, before you drive off the road or fall out of your chair, this is, of course, what they're saying could happen.
Mm-hmm.
Traders have grown so numb. 6 months ago, a print like this would have triggered circuit breakers, meaning that's where the stock exchange steps in. They stop the market for 10, 15 minutes, whatever the case is. But this is what this whole situation is started off today on top of the tariff. And that what's led to the market sell-off that I'll tell you all the details of what happened there. Then we're going to get into our topic with Dennis. Could AI make the next market crash worse? Yeah, I know. We're going to talk about Debbie Downers. And again, I didn't have time to change the topic. I'm like, man, I'm just going to, be driving daggers into our listeners' hearts today. First, tell them about the market, and then, oh yeah, this topic, yeah, could AI make the next market crash worse? My goodness. Well, we'll find some light in this storm. I promise you.
Yeah.
Let's turn it over to Kristen Snow right now. Traffic Center. Welcome back to the Jon Sanchez Show on News Talk 780 KOH. Joined by my brother, Dr. Dennis Sanchez, the AI doctor. What a great day to have him. Again, an AI related report sparked market concerns. Then, of course, the tariffs, as we indicated. All right, let me tell you what this market did, and then we'll lay out some of the movers today and get into a little bit more about what our topic again. Could AI make the next market crash worse? All right, so here's the damage that occurred today. We lost 822 on the Dow, a 1.66% loss to close at 48,804. The Nasdaq lost 259 points, 1.13%, finished the day at 22,627, and the S&P lower by 72 points, 1.04% at 6,837, and the Russell 2000 a 1.61% loss there, down 43 points. Oil, no major panic here. 19-cent loss to 66.31 a barrel. We saw two what we call flight to quality moves today. Number one was gold, 130-cent rise, closing at $5,226.20 an ounce. My goodness. And a big flight to quality in the bond market with a 10-year treasury falling 6 basis points to a yield of 4.03%. By the way, I saw the headline today. I didn't say if we closed there. 30-year mortgage finally broke 6%. So there's some bright side there for you. There's a little bit of bright side. The selling today, broad base, and I want to kind of run through this. It wasn't just tech that was down. It was a very broad base. First of all, from a technical standpoint, we had the S&P 500 break its 50-day moving average. This is, again, for those that follow the charts, this is something very significant. When the S&P doesn't hold at a certain level on the chart, meaning the 50-day moving average, that's a sign. When it doesn't hold and it breaks through that, that's a sign there's more downside. So that was one thing that happened. Now, as far as, once again, the tariff side of things, we had the European Union say, nope, we're not going to sign anything tomorrow. You had China say the same thing. Politico reported that it's unlikely that Congress will have the votes to extend this Section 122, which again is the now 15% tariff. It was 10% on Friday, past the 115 days. It's 150 days, pardon me. So Congress came out and said, yeah, we don't think we're going to have the votes to extend it past the 150 days. So the whole tariff situation is it's one spider web. Everything is thrown up in the air. No one knows anything, including the Trump administration. You can't know anything. All right. So now who got hit bad today? Well, anybody, of course. Now, this is what's interesting, Dennis. This was the opposite. On Friday, when the Supreme Court ruled against the president, we saw many of the retailers do very well that day, right? It's only going to be a 10% tariff and on and on and on. Well, just the opposite happened today. Williams-Sonoma, big importer, down 6%. Lululemon down 4.5% or 4.9%. Nike down 3.5%. Casinos, travel-related names, they were not good. Expedia down $14.97, 7.36% loss to 188.51. MGM down 6.89%, $2.54 to 34.26. Tesla down 2.91%, about $11.99. Amazon down 2.3. Microsoft down $12.63, 3.18% to, I know, 384.60. I'm sorry, bro. I am sorry. If you're wondering why Dennis always moans and groans, he's either happy or sad. And I try not to mention Microsoft if it's a bad day because
It's been a while
he's got a
since
lot
I've
of
been
money
happy.
in. Yeah, he's got a lot of money tied up in Microsoft stock due to stock options over the years working for Microsoft. So I am sorry. I just apologize ahead of time. I am sorry when I have to do this to you. Now, IBM, Dow Component. This was another major pressure point on the Dow. Big drop here, $33.78 loss, down 13.13% to 223.38. That was attributed to news that Claude can automate COBOL modernization. I don't know what that means.
Programming. It can automate programming.
It
Development.
can automate.
Yeah. Software
Why is that
programming.
big news today? Yeah. Okay. All right. So there
That
you go.
means more. It'll replace more developers, more
developers, and more engineers. Okay, there we go. I had a feeling it was about that when you see modernization. I didn't get a chance to look up it. Is COBOL, are they referring
as a language?
The programming language. Yeah. Okay.
Yeah.
Okay. All right. Let's see what else. The money managers, they got hit bad today. PE firms. Why? Because they've got a bunch of money that they've invested into AI. So KKR down $8.99, 8.89% loss. Eris Management down almost 7%, $8.59 decline. You had BlackRock, they were hit hard. American Express down $24.94. Capital One down $18.42. Why? Because fears today that AI disruption could slow high-income spending, and that sent ripples across the likes of American Express, Capital One, so on and so forth. So you see, for those of you that are new to the market, today is a great learning lesson. I always, for my whole career, Dennis, I have told my clients or my radio audience, the market is a hypochondriac. We can talk ourselves into anything, right? We can do it on economic data like inflation. We can do it on earnings. We can do it on a day like today. So now, because of these higher tariffs and this one research report out there, now all of a sudden they think, high income people are not going to be spending. So therefore, let's punish their credit card company, American Express. Go figure. Go figure. Industrial sector today. Continuation of weakness attributed to AI disruption fears. C.H. Robinson down $12.86. Data service provider Equifax down $9.03. But guess who made money today? Walmart. How do you like that for a hedge to your portfolio like we keep telling you?
Jeez.
Up $2.82 today. People still got to eat. Eli Lilly traded higher after its competitor Novo Nordisk reported weaker results from a new weight loss drug. Lilly was up $49.04, almost a 5% gain. Novo down $7.79, 16.43%. Got to mention Bitcoin. It retreated under the $65,000 mark, so no place to hide there. And again, you get the picture. It goes on and on. The bottom line, there was no place to hide. Any questions for me, bro, on this one before we start giving a tease?
What
and the big drug kingpin got.
What kind of advice do you have for us?
Yeah, I know. Yeah. Well, I'll throw one other quick thing in on a serious note. This big drug kingpin that got killed in right outside of Puerto Vallarta over the weekend, U.S. is involved there. And we saw, of course, all the trucks on fire and Americans stranded there and sheltering in place. Hadn't seen that term a lot. They used it a lot. That creates all kinds of turmoil because people go, oh, wait a minute, we were involved in that one. Matter of fact, it was our intelligence that found this guy via his lover, and therefore, could there be retribution by the cartels against America? So you had that one into.
Get in line.
Let's see if I can find any other negative news for today. My God, that's not good for a guy that's very optimistic, but, facts are facts on that one. Anyways, anything you want to throw out before we go to break here and get ready for our topic?
No, let's just get into a topic, but it's all related to our topic and just trying to figure out what AI's role in all this mess. And I think we're going to be surprised that it's, not as great as we think. There's a lot of human error and stuff involved here.
Yeah, it really is. Yeah, we're going to, again, our topic is, could AI make the next market crash worse? And we're going to really delve into how AI-driven trading, right? Something that I deal with each and every day. Algorithms, the herd behavior. Again, could all of this coming together create a market sell-off? And I'm going to leave a term with you, and I'll tell you the exact date. The last time we had kind of, quote, human error in a major market crash, remember the fat finger trade? If not, I'll remind you about that one, because there's the human side. Then we have what you may not have any idea, what we battle each and every day as we manage portfolios in regards to the AI, the algorithms, et cetera. So it's going to be a fascinating topic on a tough day. Let's turn it over to Jack Saban. He's got news, traffic, and weather. Hello, Jack. Come back to the Jon Sanchez Show on News Talk 780 KOH, joined by my brother, Dr. Dennis Sanchez, the AI doctor. As we are blessed to have him each and every Monday. What a day today to have him here once again. A lot of AI-related sell-off today. Tariff-related sell-off today. You name it, it was thrown at us. Tough day. Let's get those bad numbers out of the way. If you just joined us, 822-point decline on the Dow, 1.66%. NASDAQ lost 259 points, 1.13%, and the S&P down 72 points. All right, we're going to get into our topic here, but first, again, could AI make the next market crash even worse? But we thought, let's go back to some other, quote, market crash times. So Dennis and I were kind of joking. So here we are, again, 822-point loss on the Dow today. Let's put a little perspective. Let's go back to, let's see, 1, 2, 3. I'm going to give you 4 crashes that were either human or technology created. December 2014, a single trade caused the Russian ruble to plummet 19%. Okay. 2012, a fat finger error caused a 900-point drop in the Indian Nifty 50 index. May 6th of 2010, the flash crash. I was telling Dennis the story about that one. Do I remember that one like it was yesterday? Where the Dow Jones Industrial Average fell 1,000 points in 36 minutes. That was initially blamed on a Citigroup trader's error, though later reports found it was a large, legitimate sell order. So 1,000 points, I remember that. It fell so fast, just in a matter of minutes. We tried getting out of our trades when it started selling. There were no buyers on the other side. And then May 2nd of 2022, a Citigroup trader in London entered too many zeros on a trade, causing a sharp, short-lived flash crash in the European stock market. So it can happen. But what happens when technology/AI, because, in all honesty, Dennis, we've never really had, to this point, because AI is so new, we have not had an AI-related market sell-off, have we? So what we want to outline for you is, not if, but when this time happens, if it's AI related or caused, and I'm not talking like what we're going through right now where investors are concerned of valuations or this or that. I'm talking where AI goes haywire. Could it be significantly worse? I'm going to answer this right up front. I wholeheartedly believe worse than we've ever experienced. It'll be worse than anything we've ever seen. Because when I trade, I'm trading against the algorithms, right? A version of AI. I can't compete. No trader can compete against AI. You've heard me use the analogy. With the blink of an eye, a nanosecond, the algorithms will do a buy and sell. Human beings cannot move that fast. So this is what happened, is what we've experienced in some of those crashes I'd mentioned. And that, that was 2010, right? That was a long time ago. Think of where technology is now and how much faster these algorithms and so on and so forth are. But if they go haywire, bro, there is going to be no stopping it. I mean, I could easily see a 10,000 point drop in one day. Now, I will tell you, typically what happens when you have these, the regulators will step in and go, okay, like the fat finger trade. All right, we're busting all the trades. So anything that was bought or sold during this time where you couldn't get out, all those trades are busted, meaning it's like they didn't happen. I'm wondering if that would happen if there is a big AI-driven sell-off, a quick one. But one that lasts longer, no, they're not going to come to the rescue. One that happens in a matter of seconds or minutes, yeah, they absolutely could. But let's start with your first point, which is AI doesn't think, it reacts. And you caught me off guard on this one, I'll admit it.
I should have bet you. And that's a common one, too. And I think it's kind of time that we stop blaming AI for everything that's going on in the world. There's 2 levels of fear if you don't really understand what AI is doing. One is it's thinking on its own and it's making these decisions. And so that's scary. Or The reality is it's being programmed by humans to do exactly what it's doing, to react quickly. And you said it, it's the speed of things that's a little bit terrifying, but it's not thinking, it's looking for patterns, there's so much history in trading, and it's taking all that data and coming up with decisions based on logic that was programmed into the solution. So it's not AI's fault. AI doesn't even know what a market is other than what it's been trained on. It doesn't really understand the market, and it doesn't react like a human. So it's just going to do what it's been trained to do.
So you can't tell me that there's not some algorithms stored away at some of these high frequency trading houses around the world that are programmed, right, for that. I'll just use the term, a 5,000 point Dow drop in a matter of a couple minutes if certain parameters are met.
Sure.
And that's what an algorithm is. It's if this happens, do this. If that happens, do that.
Guess what it'll probably do? Sell, right?
Yes. Oh,
that's
yeah.
what
Oh,
it's been
absolutely.
programmed to do. So
yes, that's right.
oh yeah, that's in the program. You are describing a very scary scenario that could happen.
I know I am.
It would. The difference of
Serious.
any other type of crash in the past is the speed and the depth before somebody
Sit
can
in
go,
my seat.
how do we
Yeah,
turn
tell
it
me about
off?
it. Yeah, you can't. You can't. Well, back to the example I gave you on the fat finger. We had all of our own portfolios. We didn't subcontract any of the money management. We did everything in house. And when that started dropping, and I turned to my partner and I said, "Sell, get out." I mean, this is when it first started. It's like you sensed something was wrong. And like I said, there was no buyers on the other side. No buyers, zero. Because and even if there was, no one could jump in, right? Because the system just went haywire. It just went completely bonkers. Okay, so AI doesn't think, it reacts, right? It's programmed by human beings. Algorithms respond to the signals, not to the context. Speed, very important. Let's go to number 2. When everyone uses similar models, risk becomes very concentrated. Oh, that's a beautiful point you bring up. Deal with that one all the time.
And it's that herd effect, right? Think about it, and we've kind of discovered this in some of the AI-driven applications we're looking at. There's usually common databases that these programs are being trained on. So just because you see a different name on the product, probably at the core, it was trained on a lot of the same data and to react the same way. The same thing with these trading solutions that are probably all programmed to react the same way. So you got them all to talk about not thinking. They're following as a herd without any thinking. So that's a great example of that.
Let's break this down just a little bit simpler. This is a simple analogy, folks. So we'll call this a nucleus portfolio, right? And it's been trained that if this happens in the market, do this, and vice versa. And hedge funds, high frequency traders, et cetera, they're feeding off of that, right? They can go spend their own money, create their own LLMs or large language models, and do their own training, their own algorithms, which a lot of them do, especially the bigger wirehouses. But also, there's only one set of data, right? No matter how good of engineers Goldman Sachs may have compared to JP Morgan's engineers, compared to Deutsche Bank's, whatever, data's data. It's all a matter of you telling in the algorithm, if this happens, do this. Now, one trading house may say, if the Dow drops 500 points, sell everything. Another house may say, if the Dow drops 500 points, buy as much as you can. So that's what makes Wall Street, right? There's always buyers and sellers somewhere. It's just when we get slanted more towards one or over the other, that's when we go through a day like today where the market sells off. So to bring today's trading action into this topic, you could say very easily, I'm looking at some of the orders that came through just on DIA, which is the ETF that follows the Dow. And these were very, very large institutional orders. I'm seeing one section that maybe lasted 5 minutes, and every trade was a sell. Now, human beings don't do that. Right. Algorithms do that. So I can tell you with pretty good certainty why it happened, because it broke the 50-day moving average. So I'm watching it and I see this, and I see as soon as it broke that 50-day moving average, that's when the selling accelerated, and in both size and in frequency. So that is an example of what an algorithm is programmed. If this certain stock or this certain ETF breaks a 20-day moving average, a 50, whatever the parameter the programmers have set, then you sell. And again, the way things work, it's the domino effect. If one sells, the others do. Now, let's bring that back to why everyone uses similar models, because that's the way Wall Street has always worked. It's always the herd mentality. Those that make the big money, they go against the herd. Those that perform better, over the long term, they perform really, really well because they're not trying to outsmart the street. They tend to do better long term, but you have years where the returns aren't as good as, the shop that says, hey, guess what? Like in the Great Recession, right? You had a couple shops that went, hey, you know what? We think housing's overvalued, so we're going to short the housing stocks and mortgage, and they made a killing. I mean, billions and billions of dollars. Where 99% probably of everybody else said, oh, we don't see any problem, right? That's that herd mentality.
So what do you do?
Different firms, yeah. Well, you got to pick. You got to pick who you're managing with. But one thing that you overcome with all this is a diversified portherfolio, right?
Yeah.
Today,
absolutely.
you'd be very thankful if you had that boring stock called Walmart in your portfolio, where, like I said, it went up a couple bucks on a day where everything else tech related was thrown out. So good.
Yeah, you bring up a point about what you can control, what each of us can control in this kind of chaos.
Control our allocation.
It's the fun. It still goes back to the fundamentals. And remember, the edge we have is that emotional edge of understanding context and what's right in our heart and all of those things that aren't built into the programming of AI.
That's a great point you bring up, and today's a prime example. Do you use today as a human being trader or portfolio manager, do you use today as a day that you buy into the market, the weakness? Or do you go, I'm an algorithm, this happened, boom, I sell, no questions asked, right? No human emotion, obviously. So human emotion, I'll somewhat disagree with you respectfully. Human emotion, of course, in investing can be a positive and it can be a negative.
Exactly. I was only talking about the positive. Yeah.
Yeah. It's only the positive. The negative side is, and I've seen this before. You have a trader that is real hot shot trader. You get some of these, they'll make whatever, 35, 40% in 1 year where the rest of the market was up 5%. And you're like, what in the world did they do? Well, again, they took a lot of risk. Rarely is it, they picked out a great sector, portion of the market to be in when everyone else didn't. So they took risk, right? So they got rewarded for that. But rarely does that type of great performance continue for the next year and the next year. Usually they're like a one-win wonder, right? And I can give you a list of names a mile long where they were really great in 1 year and then something happened. And that's when you literally start seeing money managers get into drinking and drugs and divorce. And we saw a lot of money managers commit suicide, in one of the last market crashes. They just couldn't take the pressure. So there's the pluses and the minuses of the human side of it where, again, AI is like, yeah, there's no human emotions. Like if this rule is violated, boom, you sell or you buy, whatever your program is.
Here's where my hope is, and it's our ability to adapt. I can almost guarantee there are developers right now looking at all of these fintech systems and wondering what other kind of adjustments they have to make, because this is,
they learn from a day like today.
They're learning too, but we can adapt like that, and we can change our whole strategy tomorrow on a dime.
Sure. Absolutely. It's a great point. All right, let's wrap it up with Kristen Snow right now, Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on News Talk 780 KOH. Don't forget, you can pick up our show on YouTube, of course, at KKOH.com, SanchezGaunt.com, and all of your favorite podcasting distributors. Getting a great collection going on YouTube, by the way. Please join us on there. Just search The Jon Sanchez Show, JON, by the way. All right. Could AI make the next market crash worse? Probably worse than we've ever seen. The answer is, in my opinion, yes, because it's going to be fast. It's going to be severe. And again, there's nothing anyone could do to halt it. Nothing. It'll just happen too fast. Now, Dennis brought up a great point. I want to jump to this and then we'll try to wrap things up here. Bro, you brought up the issue and you said control what you can control, which is very sage financial advice, very sage. So what can you as an investor control? Let's give you 4 things. We touched on the first one, allocation, right? Nothing says you have to be all in AI or anything, right? It's not the most exciting, but let me tell you, on a day like today, you love having a diversified portfolio. On a day where tech skyrockets, you hate it. So you got to decide what's appropriate for you. You also are in control of risk management. What lets you sleep at night, right? Are you too risky? Are you going to go home tonight and pop open your favorite bottle of whatever because your portfolio tanked today? Or are you going to go home today and go, it's one of those days in the market? If it's the latter, that means you are controlling your risk. If it's the first one, that means you got too much risk. So you need to look at your risk management. Number 3, your time horizon, right? You don't care if you're not going to touch your money for 10 years when a day like today happens. You do care if you're going to retire next month or next week, right? So you always have to look at that and factor that in. And then finally, this is really your point, the emotional discipline. Doc, fire away on this one. I'll give this one to you.
Well, it's what we can control. It's self-regulation of being aware that maybe we're a little bit too emotional and reacting to the market, and take a deep breath and think about it, and think about all of the fundamentals. Isn't it interesting? We're looking at the fundamentals in contrast to all this state-of-the-art technology.
Yes,
We're back to
yes.
square one, which is still
That
working.
always comes back to the fundamentals. That's right. That's why NFL players and pro
Hmm.
teams, they all go back to basics, basic training, right? Or
Blocking and
held
tackling.
blocking and tackling. Exactly. All right. I want to wrap up with two very quick points here. Number one, why the next crash may not look like the last one, in our opinion. Number one, as I kind of said a moment ago, it's going to be shorter, it's going to be sharper, it's going to be more violent. You're going to have little time to react emotionally. You're going to have little time to react strategically. So prepare yourself for that. And then number six, long-term investors versus short-term systems. Remember, AI trades, they don't know what tomorrow means. So they are in it for what's going on right now, right? AI trades are short-term signals. Investors, you and I, we're long-term reality, right? Again, what's our time period? 5 years, 10 years, 20 years, whatever it may be. That's where the collision occurs. AI is today, are down the road. So we'll see what tomorrow shapes up like. I would not be surprised if the selling continues. I'm seeing a little stability in the futures right now, but rarely when you have a big sell-off like this for these reasons does it stop. So don't be surprised if things are a little bit on the weak side tomorrow, but hopefully I'm wrong on that one. I love being wrong there. Bro, great seeing you. Love you so much, and excellent job as always. Great topic.
Take
All
care
right.
now.
Take care, everybody. We'll see you tomorrow.
Jon Sanchez is a registered investment advisor, and the opinions expressed by Sanchez Gaunt Capital Management, LLC on this show are their own and do not reflect the opinions of News Talk 780 or its parent company, Cumulus Media. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance.